Okay, 13th of February, and welcome to the Daily Investment Show. Rudy here, where we go through ASX US indices and subsectors. There's some interesting switching going on in commodity prices. And as you can see, there's not much green today. If you had green in your portfolio, well done. So the ASX 300. So the old Iron Dome cactus, the financial sector. So it's we're at the top of this. Actually, in this video, there's probably going to be it might be an extended one because there's some interesting long-term relationships happening at the moment. Like you can see, the XFJ, we are at the top of a very long channel there. So that's led by CBA's look like that's hit resistance. If no shooting star like that one back there, but I don't think it's going to go all-time highs. The materials sector. So we were off today, but in the grand scheme of things, we just haven't gone anywhere for about a month. The materials sector over the ASX 300 is, so materials are still outperforming the ASX 300 if we just look at a monthly chart. So that's why I think you still need to have a materials focused. The energy sector. So we're looking at monthly charts now because, as I said, it's a bit of a bigger picture video, this one. So the energy sector still couldn't break through. The energy sector over the materials sector. That's what this chart is. So it's still, so the materials have still got them. The energy sector just has I reckon it's going to get them, but not yet. The gold index, the gold miners, so they're off 3% today, but in the grand scheme of things, nothing bearish. The gold miners over the XMJ, the materials, so gold miners still the sector that's outperforming. The tech sector continues to get walloped. That's a real walloping, isn't it? So anyone who switched their tech for materials has done very, very well for themselves. Consumer discretionary. So this sector's starting to get a bit weak. All those layoffs, AI seems to be the thing that's spooking the markets at the moment, and we'll get into that. And ANZ making profits through job losses. So discretionary, staples. It's not going to shoot the lights out, but it's going to be stable. The consumer staples over the discretionary. So we can see. So there's a switch from staples to discretionary. So this is a new one for you. So this is materials over staples. So while staples are doing well, the materials are still outperforming the staples. So we've still got materials and energy as the sectors you want to be in. Emerging markets. So that doesn't look like a topping formation. But if we do the emerging market, the materials sector over emerging markets, we can see the materials sector is bottoming against emerging markets. So again, we want to be in materials. Okay, S&P 500. So I think we're going to have one of these things here. So we haven't hasn't happened yet, but you can see back here in March. I actually did call that one. It's when I started the channel about a year ago. So we basically, if we get a big red candle, weekly candle close below these levels, then we're probably in for one of these things here. But you can see it was pretty short and sharp because you couldn't pick it. So you'd be out here and then you'd be buying here. Because you can't pick bottoms perfectly. So it's an interesting one for those with tax considerations. You know, if you get one of these, and so if you sell here and you crystallize a gain, and then you basically come back and you buy at what you entered. Anyway, but we haven't done that yet. So we've got the Nasdaq. So they're 40% of the US share market. So again, it hasn't had big red candle. The Mag 7, so these guys are 45% of the Nasdaq. They look pretty close to it though. So this is where the issue is. These guys are growing earnings, so there's no issue with earnings. But people are wondering what's the AI spend and what's the return on AI. That's I think what's floating around. But my view is good. It's good for energy. So it sort of just backs up the thesis of go AI because you need a lot of energy. An interesting rotation to the S&P 500 over the Nasdaq. So the S&P 500. So the Nasdaq's been outperforming the S&P 500 for God knows how long. So it's now forming a bit of a bottom formation. So of the S&P, our materials sector over the S&P 500. So again, materials outperforming the S&P 500. So in America, the energy sector. Over there, it only makes up 3% of the S&P 500, so that doesn't look bearish. If we do the energy sector over the S&P 500, so we can see here energy outperforming the S&P 500. This is the US gold miners index, so they're gold miners, not our gold miners. So again, the trend's still up. Gold miners over the energy stocks. This is the American version. So again, gold miners outperforming energy. And we've got the same thing over there in America. So their consumer discretionary index has got a bit of a topping pattern there. Whereas their staples, their staples actually look a lot more bullish than our staples. And if we do the ratio, the staples to discretionary, so we can see again the same thing. They're switching from discretionary to staples. So this is a new one, exclusive. You'll be very fascinated. Okay, so we had staples outperforming and energy outperforming, but what about energy over staples? Well, that looks like a bit of a bottoming formation there again. So we got again energy to outperform staples. So a few relationships going on out there. Okay, onto your super fund. So VDHG, the ratio, so the material sector over your super fund, so having a bias in your super fund. I've got a little pet project for those in Australian Super and Host Plus. Build your own materials portfolio with ASX stocks. If you want to know, $10 a month, join the channel. And that's how you're going to improve your super returns. Same VGS. So that doesn't look very healthy at all. If you materials over VGS, so you've had more of a materials focus than VGS, you'd have more money in your account. The US dollar, okay, so everyone's saying it's going to crash, so it's probably not going to crash. It's generally how things work. That's also what's probably positive for the share market, because everyone says it's going to crash, so it's probably not going to crash. Anyway, the US dollar is, like, if that was a share, that's a bullish pin bar. This is a test of support. So, yeah, I don't think it's all over. If we look at the Aussie dollar, we're at the top of this range sort of here. So we may have peaked here. Probably good if you're sending money over the US to be doing it around now. Gold. Okay, so yeah, I don't think we're going to be taking these highs out anymore. That's all we can ask for is just consolidation, really. Could there be another test down? So just looking at that, potentially. I mean, it may be another test down here, but we can't predict, or it could just consolidate. So Aussie dollar gold. So obviously if our Aussie dollar comes back, then that gives a bit more leverage to Aussie dollar gold. Bitcoin. Trying to find a bottom, not yet. Gold over Bitcoin. You still want to be in gold. The girlfriend. Okay, so she got whacked last night. Chinese New Year next week. So as I said, we're not going to take these out anytime soon. So it's just going to be like this for a while. So we got Chinese. So price of silver in China converted to US dollars is 87. So it's still a $9 premium, which is which shouldn't be there. Copper, so just consolidating. Oil, so oil went up and had a look and said no, not yet. Not yet. That's fine. That's the impulsive wave, and now your consolidation, and then you go in the direction of the prior trend. Just like that was an impulsive wave down, that set the tone for that. So still constructive. Natural gas, I'd say, is at support. Iron ore. So iron ore's testing support here. Now this that's in Chinese price. It's about equivalent to $100 US. That, and our miners cost is about $20 on average. So you can see they still make good coin. Uranium. So there's your impulsive wave, your correction, consolidation, up. All right. So I think we know which sectors to be in. Yeah, if you haven't joined the channel, join. We talk about all that stuff. All right. So have a good weekend.